Well, hello there, people. Welcome to another edition of Tip Tuesday. Today's lesson is on how to trade a downtrend. Last week we looked at how to spot a downtrend, and now we're going to talk about how do we trade them. Next week we'll talk about how do you know when to stop out of a trade. So if you enter a trade on a downtrend, how do you know, hey, you know what, this trade is not going to work. I need to stop out of it. Of course, stopping out means that you're going to stop losing. So if you're losing money, you want to say, hey, I want to stop losing money. How to put a stop loss on it or just simply stop out of a trade. We're going to take a look at that next week. But for this week, let's kind of focus in on something that, again, most people are not really aware is even a possibility for them, that they can make money as a stock moves down or as the overall market moves down. There are a few ways that you can do this. So one is that you could short the stock. Now, we're not going to focus too much of our effort on shorting the stock. Certainly, this is something that the professionals will do, and they use this to actually move the stock because they sell enough shares to actually create momentum where the stock begins to fall. It's based on supply and demand. When there's not very much of a demand, but there's a high supply, of course, the price of that thing is going to decrease. And so that's what happens here with the stock. So they can sell a bunch of shares of the stock. They can kind of get it going down. And the other thing is that we can use any number of bearish positions through put options. So that's primarily what we're going to focus on today. Is just the idea. Of course, you could do any number of bearish trades that we teach here through our various courses. Anything that starts with bear. So you could just do a put. You could do a bear call. That uses calls. So you got to be a little bit more familiar with how that works. Or a bear put, which is a debit spread. And there's pros and cons to each one of those. So having said all of that, what we're trying to do is essentially capture a move down. So as the stock drops, our puts gain value. And just to kind of give you a little bit of insight here, a put is the right to sell. So it doesn't really matter what you're selling. It could be a cup, a pencil, a house, a book, a phone, anything, dirt, an option. Like, it doesn't matter. If you're trying to sell it, you want to sell high. So obviously that's a big deal. So we're looking at buying a put, knowing that a put is the right to sell. I want to sell high. So in other words, I'm going to have a strike price that is higher than the current stock price, and I have the right to sell at that price. I've got a buyer waiting on me at this strike price, and I have the right to sell this stock at that price. So let's just say we have a stock that's like, say $50, and I have the right to sell it at 55. That's a huge, advantage to me to be able to sell something that's only worth $50 for 55. So you can just imagine if the stock drops to, say, we'll say just $40, and I still have the right to buy it at 55. Essentially, having the right to buy it at 55 means that I have the ability to go buy that stock at market price, current price. Literally physically go buy the stock, and then I have a buyer waiting for me at this higher price. So I could say go buy it at 40 and then flip around and have a buyer waiting for me at 55. So, I mean, you're talking about, a $15 a share differential there. So you can see how this could be very advantageous. The more the stock drops, the more that you're going to be able to make through holding that put option. So obviously, as we enter these bearish positions, we want the stock to drop as much as possible. The more it drops, the more we're able to make through our positions. So having said all that, now let's go out there and let's look at some of these opportunities and how we would think through them. So these are a couple that we were looking at just last night. I'm going to point out what we're seeing here and how to kind of think through this. So the first one we're going to look at here is PM. You can see here that Philip Morris has come up. In fact, I'm going to go to a 3-month view here because it'll be fine for us to kind of zoom in here. But you can see that what's happening is we have, again, lower highs. And when we're getting lower highs, we see a stock that is essentially running out of momentum. So what we could do now is we could go over here. I'm going to go ahead and create a ray, and I'm going to grab here and here. And then basically, you can see here that for the most part, it's a little off here, and this is kind of hard to, there you go, we're able to adjust it that time. All right, so there we have, that's a pretty good resistance line. So now we have Philip Morris with a pretty strong resistance line. We are up here now. Surprisingly, I think to me, the market was down this morning. That was not something I was anticipating. I thought we would see the market go up for a couple of days, headed into the Fed announcement tomorrow. But instead, we got to move back down to a support area around 38.40ish. That's been kind of a big important area this week. And we're moving back down into that territory rather than up. So in a situation like that, when you anticipate the market's going to go up, but instead it goes down, a stock like Philip Morris makes a lot of sense because now you see these moving averages on top. They're acting as weights. And they're pushing it down. So you can just imagine that if you're sitting out there and you're trying to lift weights, but the weight is too strong, then it collapses down on you. That's a bad thing, right? So you're going to need a spotter, make sure it doesn't crush your chest there. All right. So what we would do here is we would be able to go out here and say, hey, this stock is around resistance coming down off the 20-day. If we had negative market tone, then the next thing that we're going to look for is to say, well, where is this stock likely to drop? And here's where it becomes a little trickier because we could make a valid argument for this area right here. Looking back there into July, you can see that area right there around 93.77 could be an area where this stock could drop from 95.30 down to 93.77, or the most recent lows take us down to 93. So a drop from 95.30 down to 93 is possible. And with an option, that basically $2 drop would then allow us to make $1.25, maybe as high as $1.50, though that's probably high for what we would do at, say, a step two. But $1 to $1.25 per share. So with 1,000 shares, if this stock dropped about $2, we could make $1,000 or more if this stock dropped from here down to what has been recent support. So that's how we would play that downtrend. Now, we had a student that pointed out this one last night. This is LCID. Again, we have our downtrending diagonal resistance line. He actually, I have it high. He actually moved his line down, has it quite a bit lower. He actually misses all these wicks, and then just kind of caught the bodies here. So he had this closer to his resistance line. But after looking at it, kind of seeing some parallel lines emerge here, I was like, all right, we'll do that. In fact, let's see if I can kind of make that work here. All right, we'll go here to here. And let's see how much they allow me to manipulate this a little bit. Yeah, let's see. I want to bring this down. I want to bring this up. It's not going to let me do it. This is Charts by Treyway is kind of tough, I think, with doing the parallel lines. So let's see. Let's go ahead and delete these. Let's try it again. We're starting here. Oops, now it's zoomed in. Starting here. I'm going to run there. And now let's go up here. There we go. So now we're getting closer to the range he has. Let's see if they let me extend this or not. No, it's just moving. Boy, I really don't like that. But you can kind of get the sense here. I don't want to spend too much time on this, where if we could extend this line, it would stretch up into this area here. If we could extend that line, it would kind of follow. So then we end up having this channel. And again, if this was, imagine just this kind of stretching down here into where we are, so we can kind of follow this here. You can get a sense of where his lines are. And basically then now we have this channel here. And he was talking about this move from 16 down to around 14 as a possibility. And so as we kind of think through that, I think that kind of sets up, for a possibility. We'll see what happens with the Fed. Now that's it's a pretty big move, a $2 move on a $16 stock. It's not that it can't happen. In fact, let's look at what just happened a few days ago. We had a high of 1769 and a low of 1608. Now that's a bit of an abnormal day for this stock, but still you get the sense that was $1.60 from high to low, and this student was looking for a $2 drop. So that's not unreasonable for this $16 stock to be able to drop, $2. Now, could it stall out here closer to 1450? It could. Could it get down here? It can. I think you're going to need some really negative market tone in order for that to occur. I don't know if we'll get that much negativity or not, but if we do, something like that would make a lot of sense. Nvidia here is another one where you can see it's obviously getting lower and lower and lower. Here we are at the 5-day. Now, Nvidia is technically down today. You can see it opened at 164.75. Sorry, nope, that's not right. It opened at 132.15, but currently it's at 132.60. So it's actually up on the day. It just opened lower, but they're not really selling today. So I look at this and I say, wow, okay, so it has the look of a stock that's ready to move down, and yet it's not really moving down. They're not really out there selling. They opened at 132.15, and now here we are at 132.60. That's actually higher. So I'm not real pumped about that. So even though it certainly has the look, the potential, until you see this thing actually start to turn and go down, you have to look at this and say, wow, we had negative market tone today, but this stock's not really dropping. Do I really want to enter a put and trade this when it's trying to show some strength? Because what if it just starts to gain momentum and comes up here through the 5 up to the 10? Now you're in a bearish position, so you can only make money when the stock goes down. Instead, it's going up. That's not really what you wanted to see. So let's look over here at Intel. Intel is one I pointed out last night. You can see Intel is in a similar situation here. I really thought that if it could kind of just slowly move up, that it would be in a great position to drop. Unfortunately, what's happened is it's also in a similar boat to Nvidia. It actually opened down this morning, 29.07, but it's up, about 5 cents from there. So it's not really going up, but it's not really dropping either. So I'm not pumped about that. But again, we would look at this and say, well, how could I make money on this? Well, what's the recent low or lower? Of course, we could pop in a line here. Let's just do a little ray real quick, just so we get a sense of where we're headed here. All right. So in our downtrend, you can see that's a pretty decent line there. I suspect if we created a parallel, it would be something similar here on some of these highs, where we could kind of get a parallel line running like that. Now you can see it's a pretty decent channel there, right? So you've got your really nice downtrend here on Intel. So at this point, we're not really getting all the way to resistance. It's using EMAs as its resistance. And so we're having to trade either off the 10-day here, which would be in the middle of the range, or the 5-day here, which would be in the bottom part of that range. So it's fairly limited in its movement at this time because it's just failing to carry enough momentum to actually get higher, to actually get to the resistance line or to a higher moving average. It's just kind of using the 5-day or the 10-day as resistance. Now, if it ever had enough momentum to go up here and then things got negative again, I would certainly be watching Intel. I would have some good lines on Intel to see if it did get a run up, but then it stayed below the 20-day or below this resistance line. Then you would be in a position to really trade this and see some pretty substantial movement from, let's just say, maybe around $31 back down to 20, 29, could be 20. I'd say, probably less, probably closer to 28. So you could be looking at like a $3 drop and essentially on a $30 stock at that point. That'd be 10%. So that'd be a pretty nice move down. Now, if it can't quite gain the momentum, then we're looking at trading it off of EMAs, as I mentioned earlier. So here, yes, there at resistance, but you can see how it had enough ability to move up, right? So some might say, well, Geoffrey, could I make money on, the moves up on a downtrend? Is that possible? The answer is yes, but the reason that's a little tricky, and let's take Intel. Let's just say you bought Intel here at support. So you see that it's changing. Instead of going down, now we're at support. It ought to be going up. It does go up. But notice here that it goes up and then it moves essentially from, well, basically $30.65 up to 31.56. That's like a 90-cent move, right? So maybe you could have made 45 cents, something like that. But the problem is, what if you entered right here? And so you got in around 29, say 50, and then it's moved up, but has it really moved up? No, it's actually gone, flat here. So, if we got in around 29, 25, well, even though it's moved up, it's really going flat, and that wouldn't make us any money. So the problem with doing a move up on a downtrend is that it can go flat. And if it goes flat, of course, you're not going to make any money on it. So it can still go flat and either hit EMAs on top, use those as resistance and drop again. Or if it goes flat long enough, it could actually get to resistance and then drop from there without you being able to make any money. Now, if it makes a move that's like this, right, and it goes up quick enough and in a short enough time period, and maybe even a move like that, there are opportunities where you can make money. A little bit here, nothing here so far. So can you trade the up moves on downtrends? You can. Are there some issues with that? Yes, because it needs to move up quickly and it needs to have enough of a rise here to really cover a lot of ground so that it gets all the way to resistance, or otherwise if it goes flat like Intel has, we're not really going to be able to make any money off of a bullish trade. So generally, we're looking at downtrends for opportunities to buy at resistance, either the resistance line or exponential moving averages acting as resistance. Remember, weights pushing it down, and then trying to take advantage of our bearish strategies as the stock drops. Normally, the stock will drop, and that will be because the overall market is dropping. But sometimes they're just so negative, or things are, just losing momentum, and it'll fall even with the market kind of being neutral to positive. So that is how we trade a downtrend. And next week, we will look at how do we stop out of one of these? When would I stop out of a downtrend, particularly a bearish move on a downtrend? What would that look like? How would I think through that process? And we'll be covering that next week. So thanks for being on with us today. And if there's anything else, let me know. I see that there's, oh no, are you serious? Oh, I just see all the comments. I was doing that whole thing and you guys didn't even see my screen. Oh gosh, that's such an amateur mistake. Wow, I did not realize that. So you were just seeing me and not my screen. Seriously, that's dumb. All right, well, let's do this again. Golly, seriously. That is so dumb. All right, wow. I can't believe I did that. That's idiotic. All right, well, let's try this again. Golly, I can't believe I did that. All right. Gee whiz. All right. So, okay. Sorry, guys. Wow. That's so dumb. I can't believe I did that. All right. So this is going to make a lot more sense now that you can see the screen. So let's go back and start where we did. Philip Morris, again, you can see our line here. We're at resistance, right? So it's should be coming down. The thing about Philip Morris is it's not really dropping today. And if we're going to make money on down moves, obviously the stock needs to be dropping. So what we would like to see on Philip Morris, you can see that we've got the resistance line there. And if we came in and drew a similar line here, it would look something like that. And so that would be, see if I can get these kind of close. With this one, it's a little bit tougher because I don't like the parallel channels. To me, they're really weird and hard to work with here. But that gives you a general idea. That's essentially your downtrend. So from resistance to support, from resistance to support, from resistance to support. So it ought to be dropping today. It's not. And I think that would be bothersome as far as our bearish trade is concerned. Yes, it's at resistance, but this might be one we have to use next week to show as an example of a great entry but also probably a reason why we would have to maybe stop out. So we'll see what Philip Morris does. Um, I mentioned Nvidia as well. So Nvidia is also at a place where it's pulled back up, but it's at the 5-day. You would think it would be dropping down here to the recent lows, but it's not. LCID is one a student mentioned. I talked about this earlier, but you guys couldn't see. He's changed his lines. His lines run a little bit more like from here to here, and then he starts catching this area. So it's a much steeper line down here. So his resistance is closer. And he was talking about this falling from 16 to 14. Now, will it get to 14? I don't know. It could stall out here closer to 14.15. That's a pretty big drop for a $16 stock to drop $2. Could you get a good solid support line on this? You actually can. Let me see, where did I do this? Let me hop over here real quick to another chart because I actually drew it over here. Yeah. So you can kind of see here that once we get our resistance line, you can see our support line here. And these are the lines that he drew. So you can see I took the highest highs. And so my resistance line is much higher. But when he dropped his lines down, it gave you a pretty nice channel here. And so that's what he's trading. Now, again, the channel would take you all the way down to 13. I don't see that as being very likely. Again, we kind of look at this and say, well, this stock is down 2.5% today. That's a pretty good drop. Whereas some of the others that we've looked at have not been down much at all. And that's not really what we wanted to see. I mean, really, if we're looking at stocks to enter today, eBay is one that we did look at. We actually wanted to see eBay pull up a little bit more and then drop. But of course, with the negativity today, it didn't do that. And then Intel is one that I was talking about for a while. You can see we've got a pretty solid resistance line up here. Support line is right here. So again, we're from support to resistance. Normally, you would say, okay, it's got to go all the way up here. EMAs on top can act as resistance. So if you're in, say, a bullish trade here, you're trading from support to resistance in a downtrend, just keep in mind that any of these EMAs on top, any of those EMAs, could be the 5-day, could be the 10-day, could be the 20-day, could act as resistance and push this down like it did right here. Now, the big drop in the overall market had a lot to do with this falling where it did too. But that's where we are. So again, you kind of look at all of these and it's a little surprising. Yes, Intel is down today, but not as much as I would have think it would have been with the S&P being down almost 50 points. I would have thought that Intel would be closer to this area. So some of these downtrends are at good buy points, but they're not really falling much today. And since they're not really falling, that would be problematic. That we want to see it dropping. Obviously, that's how we would make money on these bearish positions through the various strategies. So we want to see it dropping. And if it's not really dropping, then that doesn't really do us any good. So you're looking for a couple of things. Obviously, to trade a downtrend, you would like to see it either at resistance or at an EMA, in which case you could enter there. And then you want to see some clarity as to where you think the support line is, because it ought to drop from either resistance or the EMAs back down to your support line. You can see here that Intel has been doing a pretty good job of that. So going from support back down to resistance. Here it was the 10-day acting as resistance back down to support. Here it might be the 5-day. It's showing enough strength here today to kind of make me question that. Maybe it's not really going to drop or they're going to need some real commitment from the market in order for that to happen. So again, a couple of things. We're looking for a move where a stock is losing momentum. So we're seeing lower highs. We would also like to establish ideally a lower low that would give us the downtrend. Then we would know what our target prices were. So how long should I stay in this trade? Well, until it gets to support. Where is support? Here. I'd like to stay in this trade. How long? Not very long. It hits support in just 2 days. Now it continue to fall for a couple of more days, but you're looking for that. It could be that we create a bit of a wedge, so we have higher our lower highs, but then we could maybe see, something horizontal here, not on this one, but we could see that. And if so, then we would be trading essentially a descending wedge. We would still trade from resistance down to support, but we would really like to find support, whether that's horizontal or diagonal. That gives us, again, a target of where we ought to be seeing that thing drop. Then it would be nice to have negative market tone. And then, of course, we want to see the stock actually falling. And if we can take advantage of all three of those things, then we can trade a downtrend. All right, so now I'm going to stop sharing. Sorry, I messed that up earlier, guys. That's crazy. I don't know why I didn't catch that, and I did such a poor job of just talking to myself. It was a good explanation, but it wasn't very helpful if you can't see the screen. So, oops. So now you guys, I guess, can go back and kind of watch the replay here and kind of go from there. But sorry about that. Thanks for trying to make me aware of that too. But no, I was on a completely different screen. I thought you guys were seeing the screen with me. Turns out I was seeing the screen and having a good old conversation with myself, like Kelly said, just on autopilot. So, all right. Well, that's and as they say, I guess there's a first for everything, and I'm pretty sure that's my first time to do that. So you would think I'd never done one of these before. So sorry about that, guys. But that is our tip for today. If you can work through all of that stuff, and we will see you guys next time.